Hi, everybody. Hope you're doing well today. Good to have you with us. This is Craig at Max Trading, and it's a pleasure to welcome you to our live trading session today. Thank you for attending. And of course, we also welcome those who will participate by video. We're starting just a few minutes early this morning because there are already a good crowd in the room. So rather than just sitting around, we'll go ahead and get started. But I must take a moment and remind you that nothing you see or hear in this webinar today can be taken as trading advice, as an entry or an exit recommendation, all of it. Everything is for educational purposes only. So please remember that as we go through the webinar. Eusebio is here to lead us into the live markets for this NFP session. Some of you have not yet met Eusebio, and you are about to discover that he is a highly skilled trader and that he really enjoys assisting his fellow traders. So this is your opportunity to see a professional at work and to see with your own eyes how effectively max trading methods can take advantage of the price action. And speaking of the price action, as always, we don't know what the markets will do during any trading session, even the NFP. We may see some very nice price action today. We hope so. And if that's the case, then you'll get to see max charts yielding a very nice profit. We may see some very poor price action. We hope not, but sometimes that's the case. And if so, then you still will learn a lot as you get to see how max methods protect the trading account when the price action is not so good. So either way, we'll learn a lot. We'll have fun together. And again, thank you so much for giving us a little bit of your time today. If you have questions, we want to be sure that those get answered. So we'll be keeping an eye on the question area. Please feel free to use that GoToWebinar question area and ask a question anytime, and we'll get to it just as quickly as we can. So Eusebio, thank you again for sharing with us today, and I'll pass the microphone along to you.
Thanks, Craig. Hello, everyone. I hope you are doing fine. So we have some time before the non-farm payroll and all the related news will be released. So let me explain some details on how I see the day today, because it will be a challenging day. Not only because the non-farm payroll is always a difficult event to analyze. There are several reasons for that. Sometimes it's very clear, sometimes it's less clear, sometimes it's ambiguous. But today we have another event on the global context with what is happening in Syria. And so we never know how the market can react. Let me show, first of all, some chart, for example. Where is my cursor? Here. If we take the euro-US dollar, for example, during the ASEAN session, so we can see that the reaction with the Syria event has been very limited. This is the case in the euro-US dollar. If we look at the pound-US dollar, for example, we have even less reaction. The reaction is coming later, but also with news with the pound. Specifically, we have had here the manufacturing production, which has been negative for the pound. Previously, we have had the Halifax housing price index, which has been neutral. I'm going to show you that on the calendar. So we never know what how the market will react based on these problems in Syria. So we have to be extremely prudent, because this will make the situation much more difficult to analyze. Let's check the calendar first. So we see that we have a group of important news release on the CAD and on the US dollar. They are all in red, and that color is a correct color. The color code in Forex Factory is not always correct, but in this case they are correct. So we have, first of all, the employment change and the unemployment rate on the CAD. My bias is to be negative on the CAD, but the bias can change right after the news release, and we can see on the chart, if I take two pair like the USD CAD, indeed we see that the CAD is weak, but on the pound CAD too. So it's clear that the market has anticipated that weakness. This means that if indeed the numbers are bad for the CAD, we may have some limited movement because of the previous anticipation. If the numbers are positive, on the contrary, positive enough, we should see the USD CAD, the pound CAD moving down very quickly. So it depends on the news release. And then we have the more important one, with the non-farm payroll and the unemployment rate. 2 minutes later, we will have the revision. It is not indicated on the calendar, but 2 minutes later, we will have the revision of the non-farm payroll for the previous months. And so my bias is to be negative on the US dollar. Even if during the Asian session and the London Open, we have seen a change in the bias for the US dollar. The US dollar was first of all weak, then has become stronger, and so this is why the combination of all these events make the day a little more challenging. So, but this is also what is interesting in trading. But the point is, we don't need to take any risk in the market. With the non-farm payroll, my experience shows me that we have an opportunity, a good opportunity, in around 50% of the case, and sometimes even less, in 30% of the case. And so this means that in the majority of the case, it's better to skip and to skip the day, to skip the news, and sometimes even to skip the day. And so usually when we will have a big deviation, then it's easier usually to know the direction to trade. It's not always the case. Sometimes it's difficult. The market does not always react in what seems to be rational. There is always a reason why the market, how the market reacts. So we have to wait. And if the bias, if the deviation is not big enough, so we should see not a lot of influence in the market with the non-farm payroll. And so it really depends on the news release, and the non-farm payroll is not a so easy report to predict. And so we have really to wait now in around 15 minutes. And so this is how I have prepared my day. So I am usually so negative on the US dollar, negative on the CAD, I am negative on the pound, positive on the yen, of course. And so this is why I have made some pairs. I have chosen some pairs to consider. And let's suppose we have nothing special on the CAD. I will eliminate the CAD pairs. Usually the CAD pairs are pairs I don't like to trade because these pairs are usually more choppy to trade. We can see the euro-yen is really ugly for the moment. So, but usually the euro-yen is behaving better than the euro-US dollar, which has a clearer type of movement. So, if you have any questions, so feel free to post them in the question area. We have 15 minutes approximately. So, and after the news release of the non-farm payroll, we will still have to wait 2 minutes for the revision, because sometimes the revision of the previous month's non-farm payroll can create also or add to the volatility in the same direction or in the opposite direction. And this is one of the reasons why the non-farm payroll is difficult to analyze. And sometimes the market takes time to analyze the implications of the non-farm payroll, and so the reaction is not necessarily immediate. Or we may have a quick speculative movement, but then the fundamental movement can take time to develop. Usually, when we have a big surprise, in the non-farm payroll, we see a movement in 3 steps. Let's take the euro-US dollar, or I will take, for example, the pound-US dollar. We can take any one. So let's suppose we will have a bad non-farm payroll with a big deviation. So we should see the US dollar weakening. And so we should see, the first step is to see a fast spike to the upside, and then a fast reversal. The reversal will be the second step. And the size of the reversal, the retracement, may be more or less important. Sometimes the price will retrace just a portion of the spike, and sometimes the price will retrace totally the spike. And then the third step is to see the price moving in the direction of the news, and so in a more organized way, and so it will be the fundamental movement. Now, sometimes there is a fourth step, which is in fact a pre-step before the three steps I have just described. It depends on how the market will have anticipated what the non-farm payroll may be. Even if the non-farm payroll is not so easy to predict, banks have possibilities to better understand or to better forecast what is happening in the market, or what they can expect, in fact. And as you can see on my chart, I always draw on my chart vertical lines. I have two types of vertical lines. So yellow lines corresponding to the open or the close of the main open and close I'm facing during the moment I'm going to trade. So I have the Frankfurt Open, the London Open, the Wall Street Open, the New York Open, the Wall Street Open, the Frankfurt and the London close. And then with red vertical lines, the main news release of the day. Even if we have on the calendar many other news releases, many of them have no impact in the market. And so we consider only those who have an impact in the market, and to know them, you can consider our website here. I'm going to show you. www.maxtradingsystem.com/newswatch, and every week we mention all the news day after day for the coming week, all the news we consider very important, and with the possible impact in which type of time frames. If a news is simply indicated as major, the news will have an impact in the case of a big surprise only on small time frames, and when it is indicated as major H4+, this indicates that in the case of a surprise, the impact will be also on higher time frame. And we can see, for example, that for the non-farm payroll, we have, of course, a type of news indicated as major H4+. When we have simply the indication monitor, this means that we have to expect some volatility, but not dangerous situation. So, it seems that one of the participants has no sound. I'm going to answer to him in the question area. Okay. So 10 minutes before the news release. Now, in order to have a big deviation, a deviation is a number different from the forecast. You can see, for example, for the non-farm payroll, the forecast is 174,000. And so we will have a negative deviation if the number is smaller, a positive deviation if the number is larger, and but having a deviation is not enough to have an impact in the market. The deviation must be large enough, and being large enough is a feature which is specific to each news release. It is not enough to say that a deviation of 10% or 20% is enough. For some news, 10% is enough. For some other, even 20, 30 or 40% is not enough. The non-farm payroll is typically such a news for which the deviation must be large enough to have an impact in the market. Lucas says ADP was very positive on Wednesday. Yes, indeed. If we check on Wednesday, the ADP non-farm payroll here has been positive with a big deviation, 30%, more than 30% compared to the to the forecast, but the problem is the ADP non-farm payroll is not very accurate. And so I have seen cases when the ADP non-farm has been positive and the non-farm payroll has been negative and vice versa. And so I don't necessarily take the ADP non-farm payroll into consideration. So it is an element of the analysis, but I really want the confirmation with the non-farm payroll itself. And I don't guarantee myself that because the ADP has been positive, that, or I will not bet on that. I will not bet on the fact that the ADP is positive to bet that the non-farm will be positive too. Perhaps yes, perhaps not. So we have to see, to wait and see. Wait and see, as British always say. And so when we observe on the US pair for the moment, we see that the US dollar seems to weaken. The euro US dollar is going up, pound US dollar is going up, USD yen going down. USD CAD for the moment is pausing, and so it seems globally the US dollar is weakening. Perhaps the market is anticipating a bad number, so we will be fixed very, very soon, in about 6 minutes now. I have not time enough to, oh, okay, I see a lot of people telling that the sound is good on their side. That's good. These days, GoToWebinar, for several days, these days, GoToWebinar has some technical problems. This happens sometimes. So I have no time enough, 5 minutes will not be enough to explain some of the other features we have on the chart, some concepts we use with the Max. If we have time enough, I will explain them later today in such a way that you can receive some useful information you can use in any trading system. So I would like to remember, as Craig has explained, this is not a trading room, so we don't have the right to call trades. I'm not licensed to call trade. Here in Europe we have very strict rules for that, and it's really complex, and I do not want to break the laws of the European Union, and more specifically of Belgium and France, because I live in the two countries. And so what I will do is I will simply explain how I personally apply the max rules to a specific situation, and I will simply mark my chart, so just to show you how the max can handle some specific situations. So no trade, just observe. If you take a trade, it will be your own responsibility. So trading is always risky. There is never a guarantee to make a profit, whatever the trading system you use or the trading methodology you can use. So pay attention. So 4 minutes before the news. So normally the calendar should now indicate the small green button. Yeah. What I'm going to do, if you have the calendar on your own side, I will move the calendar here on my second screen in such a way to be able to see what the price will do as soon as the news will be released. But remember, we still have to wait minimum 2 minutes, and for the revision, we don't know the number of the revision, so this means that after these 2 minutes, we will have to watch carefully what the price is doing before taking any potential decision. So
Hi, Eusebio.
yes, Craig, please.
While we're waiting, we have quite a few traders who are considering the standard course and are curious about the ETF indicator. Would you talk for just a minute about what ETF can add for a standard trader?
Yes, sure. I will explain that after the news release because the news is in 2 minutes now.
Okay, great. Thank you.
Oh, Craig, can you put some message for Howard? He still have no audio. Perhaps he should restart, relog in, or perhaps reboot his PC. We see that at 1 minute before the news release, the market becomes a little more nervous. So this means that there are traders who try to take positions. Lana, I will explain the ETF later, okay? Just after the news release. And if we have a surprise in the news, you will see a big spike. I never try to catch these spikes because if you display on your chart the ask price or the bid and the ask price, you see the spike, how it is fast. So normally we should have a bad number for the US dollar. Yeah, 98,000. So we have a very bad number for the US dollar. So big deviation. And so as you can see on the euro US dollar, a fast spike to the upside, similar to the pound US dollar, to the downside on the USD yen, on the USD CAD. And you can see that now we have the retracement starting in all the charts. And so the retracement is the second step. But we still have to wait for the 2 minutes mark for the revision. So we have also to take into consideration the unemployment rate to see if the two numbers are coherent. We have 4.5% for the unemployment rate, so the unemployment rate has dropped, so it's better than expected. So we have two conflicting informations here, but the non-farm has been very negative. So let's wait for the revision. And concerning the CAD, for the CAD we have a positive employment number, and so employment change, and we have a neutral unemployment rate. So a good number for the CAD, a bad number for the US dollar. So it's not a surprise to see the USD CAD going downward. But what I'm expecting is indeed the retracement, and then after that the price resuming the down movement. So the revision is being published now. My charts are a bit frozen. This sometimes happens with the news release. This is an action by the broker, but soon they will restart. And anyway, it's not a disturbance for me because I never try to trade these movements. On my other platform, the chart are no longer frozen, so the retracement continue. And so let's see. Okay, the price has started again. So here, usually when we have a surprise, if the retracement has been deep enough, we can consider on the next candle, for example, to trade in the direction of the news. And so we can go short for the pound CAD, we can go short with the USD CAD, short with the USD yen, long with the euro US dollar, long with the GBP US dollar. I will ignore for the moment the euro yen and the pound yen. So it's still a bit too early to consider any decision. I like to wait generally 5-10 minutes after the news release. Okay, we have the new bar starting. So we can see that the price has retraced somewhat. So we can consider the price should normally continue to go downward on the pairs like the US yen, the US CAD, the pound CAD. And so normally here I take usually a short trade, and my entry would be somewhere in this area, and with a stop loss. The stop loss will be, let me enlarge the chart. Usually we have constraint on the length of the stop loss. It would be somewhere here in this area, perhaps even higher here. So in this case we would have a stop loss size of around 46, 47 pips plus the spread. So we have 2.5 pips spread. But we have to pay attention because we have also potential resistance level. And so when the data are somewhat ambiguous, I generally don't take this kind of trade. When the number is not ambiguous, so I take the trade. We have somewhat of an ambiguity in the news release because we have a good unemployment rate, and so this is for me a counter indication to consider now taking such kind of I prefer to wait for a deeper pullback before considering taking the trade. But you get the idea. When I will see the retracement deep enough, I will tell you what my decision will be. And here we have a similar situation. We have now the price facing a support level, so going short now is a bit too early. We don't have enough potential to consider any interesting trade. but the stop loss will be at the same place. You see how the spikes has reached that support level. Similarly in the USD yen, a bit further compared to the pound yen, but the next level will be far, far lower. So let's still wait a few minutes. So we are in fact seeing the step 2. I have explained, so the retracement phase. Should I take a trade on the card? So I would place my stop loss. Let me see. It would be a very, very big stop loss. And we have a very long spike. So the retracement has not been very large, but we have had a good number on the card, a bad number on the US dollar. So in this case, I would not hesitate to enter below the support level. And then I will consider placing a stop loss above this level here or this level here, or perhaps even this level here, even if the stop loss size is a bit large, 55 pips, it's a bit large. But with that volatility, we have no choice. So patience. Now we begin to see a retracement which becomes interesting on the USD yen. The potential is not enough to consider. Okay, here we have a good opportunity now. So on the pound card, the US dollar card, sorry, here. The trade is a bit risky because we are at the extremity of that very long bar, but we have bad number for the US dollar, good number for the card. And so we should see the price continuing to go downward, so here. And we are past the support level, and the distance to the next levels is large enough. Yeah, the US dollar has, the pound US dollar has a good retracement. The support helped too. And so this is now a good opportunity. The next level of resistance will be the home base here, but we have distance enough. And so here is a good opportunity here too. But I will not consider the pound US dollar because for me the movement will be rather limited simply by the fact that on both currencies the numbers were bad. So bad on the pound, bad on the US dollar. Worse on the US dollar, so we may have some potential to the movement, but for me limited so. I prefer pairs like the USD yen or the USD card or the pound card. The pound card, I have forgotten the pound card, but the pound card was also a very good opportunity to go short here, in fact. But forget it because I have not mentioned it in real time. So we have had a bad number on the pound, a good number on the CAD. So we have had that first spike, the retracement, and then the resumption of the down movement with a stop loss somewhere. Yeah, or I will even widen the stop loss. So here, so a stop loss size of around 50 pips, considering the spread. But I agree, I have been too late to indicate it. But it's the same logic as with the USD card. Bad number on the first currency, good number on the second currency, and so normally the fundamental movement is in the direction of the good currency. And so let's consider, so now only the USD card and the pound card. So here for me on the USDN, so we don't have enough potential, so I will delete this. We can see that the volatility seems to settle down, which is a good indication usually. And what I'm going to do is I'm going to widen the two charts to focus only on these two charts. I'm going to write on the two charts the size of the stop loss. So here we have a stop loss of, let's say, 60 pips plus the spread, so 62 pips, a bit large, but that's the price to pay in such circumstances. So ESL 62 pips. And this helps also to lower the risk when the trade goes bad or wrong. And here we have, let's say, 48 and let's say 4, so 52 pips. 52. We are not afraid with these large numbers, even in a small time frame like the 5-minute time frame, because this is the way to avoid to be exited or to be stopped out too fast when the price is making some spike in the opposite direction. So here, this bar, that series of bars are long bars. The size of this candle is 24.4 pips. And so if the price makes a retracement, I make here around this level here, I will scale out in this area. So 8.1 pips, for example. So yeah, this level. If the price hit this level, I will scale out. You know that with the max, whenever we open a trade, we consider the trade is made of 2 units. The size of that trade is calculated based on the stop loss size and the risk we associate with the trade. For example, 1%, 2% of the trading account. And then when we scale out, when we make a minor exit, we close 1 unit. In this kind of situations, because we will have not a very long session, I will not consider scaling in here. Okay? And so let's see what the price will do here. We have several types of exit technique. Exit technique based on here the price action. So one specific exit technique with a long bar. Whenever we have such a long bar, it's a good idea to close a portion of the trade when the price begins to retrace, and we can choose based on our own risk aversion the portion of the length of the bar for that retracement. I like to take 1/3 of the length of the bar. We have also exit technique based on other price action pattern. We have exit rules based on patterns made by one or several of our indicators. We have exit rule based on time consideration. We have exit rule based on the movement invalidation. So we have several categories of exit rules in order to try to be as accurate as possible to make our exit. So now, when we trade such kind of movement with a big surprise in a news release, this is somewhat an exception compared to the usual rules of the max. And this requires some skills and some experience. And so we always advise to traders who don't feel comfortable to this kind of movement to don't trade these news. You see here an exit has been triggered here exactly when the price hit that level. And so here we have what we call an MX momentum exit or minor exit. So we close half of the trade, so 1 unit of the 2 units of the trade, and that unit catches a profit of 25 pips minus the spread, so let's say 20 pips, so plus 20 pips. And here the price is still retracing on the USD CAD. So while the price is moving now, let me give some explanation about the ETF line. So we have one yellow and one dark orange line, which are very close together. This is a special tool, a special indicator we have built. It is very special to the max. And the aim of these two lines is to catch many more momentum directional movement and to catch earlier reversal. With the max, at least the max standard, when the price is moving below the home base is our long-term moving average, which is indicated here in light blue or aqua color. So we look for a short trade, but only when the price is below that moving average. With the ETF line, the max ETF lines, we can consider opening a trade, a short trade, even if the price is moving above the home base, provided it reverses. And we can see here that it was not possible to enter earlier, and in front of the non-farm payroll it would have been very, very risky, but usually this is the case. Here is a nice example. After the bad news on the pound, we had the possibility to go long here, despite the fact that the price was moving below the home base. And so this is the feature of these max ETF. They have some important advantages. You can see that for long portion, for very long portion or large portion, they stay very separated and they are very regular. And when the price is nicely trending, so they may give very, very large movement. And even when we have such kind of pullbacks, these pullbacks have no impact or almost no impact on these lines. And this helps us to make very nice trades when we have normal market conditions. So Suzanne, for the USD CAD, we don't have a level yet. We need to wait for a setup bar, for an exit setup bar, which will be given with this blue candle. When this blue candle will close in around 2 minutes and a half, so this candle, if it closes as a blue candle, will be an exit setup bar, and then we will have our exit if the price follows through. This red candle was a long or a longish bar, but the price has retraced too much to consider a potential MX as in the case of the pound CAD. And unfortunately, we cannot use the long bar rule to make our MX here. But we don't need to worry because the stop loss size is large enough. So that MX, if that MX is made with a loss, it will be a small loss anyway. Okay. And in fact, it may happen that this retracement is still part of the retracement I was talking about as the second step of the movement. So first step, a fast movement in the direction of the news, then a retracement, and then the fundamental movement. Sometimes the retracement takes time. See, in this case, the pound card resumes the down move, so this will definitively give a very nice trade. Yeah, it is. Yeah, you are right. It is a long bar, but it has closed way after the price has reached the level where I usually make my MX. So in such a case, I cannot make my MX. So the bar will close in a few minutes. So here, so we will have an exit setup bar here. Let me draw it in magenta. For 4 seconds. And then I will make my MX somewhere in this area. It's easy to recognize here, but it is just a coincidence when the price will reach the extreme of the dark orange level here. And the price continued to resume the down movement in the pound card. Normally, if the market reacts rationally, we should see the price resuming also to the downside with the USD card. Normally. And when I say normally, don't interpret that as always. The term always never exists in the market, in trading. And of course here, while the price is moving in the direction of the trade, we can, of course, when we are in a trade, we can tighten the stop loss based on our rules. I have to pay attention here. So somewhat in this area, making the second unit almost break even. You see here the price is resuming, seems to resume the down movement without having reached my exit level, so no MX in the USD CAD for the moment. This is the virtue of being patient. Yeah, Bruce, indeed, maybe. In fact, I'm going to give you the secret to be patient while the price is retracing when we are trading such kind of situations. So news releases when we have a big surprise. First of all, never hesitate to use a larger stop loss. And then, because this contributes to reduce the size and so the risk on the trade, and then use a small risk. I consider personally that 2% per trade is too high risk. I rarely go above 1%, and most of the time I take between 0.5% and 1% for my risk. When you are trading such kind of trades, such kind of situations, 0.5% is good enough. And so even if in the worst case scenario you lose 0.5% of your trading account, is it hurting? Not at all, at least for me. But the way we handle the trade, we know that usually when we make a losing trade, the loss is very, very small. And so even if the price retraces very, very much, I don't fear. I never fear in such a case. Using a small risk per trade in terms of percentage is one of the secrets to feel much more comfortable in your trade. Now here we have two possibilities. This red candle for the pound card was also a long bar, so we can close the trade if the price retraces around, let's say around that level here. let's say it was 11 or 12 pips around this level, or we can wait for the price to reach the movement invalidation. But the movement invalidation area, which is the area between our momentum line and that small dotted line, is too far away. But we are almost break even with the second unit. So what I do sometimes, if the profit, it is not the case here, but if the profit is large on the first unit, I can wait for the price to reach the movement invalidation. Because in this case, if the price resumes the down movement, or if the price begins to consolidate, the momentum line and the invalidation zone line will follow very quickly, protecting more and more profit on the second unit. Oh, fine, Jan, fine. Yeah. I suppose it was a small movement. Let's check quickly. Oh, you went short. Oh, that's good. That's good. But as I have said, for me, I'm expecting a rather small movement on the pound US dollar. And so here, if the price hit my level, so I will consider making an XXX. Closing that way. Okay, here the trade is closed. And so here we have what we call our XXX. And then fast trade, but rather easy trade. So here 44, 45 pips minus the spread, let's say 42 pips. So plus, because we have to subtract the spread, of course. Okay, this means so nothing dangerous here on the pound, on the USD CAD. So on the pound CAD here, so we have 20 and 42, so 62 pips profits. So let's write on the chart trade plus 62 pips, the stop loss being 52 pips. This represents a reward to risk ratio of plus 0. So I have to make the calculation here. So 62 divided by 2 and then divided by 52 plus 60 R. This is not a so big trade, and the reason is what I have explained previously, just before the news release. You can see that the market has already moved somewhat. And so here, of course, that news on the pound was a bad news too, but the market was also anticipating a continuation of that fundamental movement with all that push here. And so this is why the movement is rather limited. Now you will see, if we have time enough, you will see the difference in the result if we take the alternative exit when the price reaches the movement invalidation area. Because we have always that possibility. We have two ways to make our final exit, either when an exit will trigger, like in this case, or when the price reaches the movement invalidation. On the long term, based on hundreds of trades, the results are approximately similar. But I would like to show you that if we have time enough. So it seems that now the price is coming back. So we have had in the USD CAD an exit setup bar, but the price has not hit the exit level. Yeah, Jan, it depends. It depends. As I have said, we have seen some ambiguity in the non-farm payroll and the unemployment rate. We have had a bad non-farm payroll, but a good unemployment rate. when the two numbers are in agreement, we see a movement lasting sometimes several hours, 2, 3, 4, 5 hours. Arunas, I don't understand your question. The difference between max primer and the max light is with the max primer we have only 2 entry setups and a few exit rules. With the max light we have additional entry setups, not all the entry setups of the max standard, plus some additional exit setups. But the template is the same for the max primer and the max light. Arunas, you ask, I don't know how write config max bands. You mean the Bollinger bands? These bands here? I have to look carefully here because we may have another exit rule trigger. Let me check here what we get. Arunas, I'm sorry, I don't understand what you mean. Does with new 2014? What do you mean? The template is the same for years, in fact. Okay. So for the max bands here, if this is the max B bands, so the settings are 21, 3, 1, and 2. Okay, 21, 3, 1, and 2. What is happening in the pound, in the US CAD here, it depends how this candle will close. We may have another exit setup triggering, which is called in the max standard the 3 RBs. But it will really depend how this candle will close. Bruce, no, I never use a sell stop. I never use such kind of orders. I always prefer to execute my orders at the market. Because if you, what is the problem? Let's suppose you set a sell stop here, okay? For example, the price comes to that level. If it touches that level, your order is executed automatically. But if the price comes back very quickly, manually, you will have almost all the time, you will have no possibility to open your trade. But with a pending order, your trade will be executed. This is why I always prefer to check carefully what the price is doing and make my entry at the market. Yes, Arunas, max light has, so the difference between the max primer and the max light is, first of all, they use the same template. But with the max primer, we have 2 more entries, and we have several additional exit techniques. Okay, that's fine, Arunas. That's fine. So 30 seconds before the close of the candle, and if the price continue going that way, the exit setup will disappear. In the pound CAD, we have another potential exit setup appearing, but because we have made our exit, so this setup, of course, makes no sense. And you can see here that the price has almost reached the next support level. Okay, we have the 3 RBs pattern, and so normally here I will make an MX around this area. Let me draw an horizontal line here. Yeah, in this area. Oh, it's good. We don't need to be accurate on the pips. So here we have also an exit setup bar based on an indicator here, and if we are still in the trade, we will have to define an exit level which is not too far away from the previous level here. So the result would have been a little bit better, but not significantly. Now, with the price reaching in both cases the support level, we have to check more carefully. Mainly in the case the trade is opened. Oh, Arunas, usually it's a good idea not to trade the non-farm payroll. You need to feel really comfortable and to really understand the impact of the news on the market, but also depending on what has happened previously in the market. This is why I say I have an opportunity with the non-farm payroll in about 30 to 50% of the case. So this means that in the majority of the case, no opportunity at all. You see how the price hesitates here around the support level or at the proximity of the support level here. So the price has resumed the down movement without hitting my exit level. So I still have my 2 open units here on the USD CAD. And so it happens afterwards that this was not the ideal entry. The ideal entry would have been in this area, but again, too close to the support level here. Not enough potential movement. If the price crosses the support level here, it may have a chance to follow through and to come closer to the next level, which will be at around 60 pips lower. I have some doubt, but we never know. We have positive circumstances, but with some ambiguity, as I have explained. So I have no regret to have considered my x66 here. Never. So these levels I draw on the chart in white colors, in yellow color, in purple color, so that there are several levels of support and resistance. I calculate them every weekend, and so they stay valid for the entire week. And in order to see what is the pivot which has been used to define that level. So let me show you here. See, these are all levels having been defined way earlier, the 30th of March, and it is still valid nowadays. You see how the price has bounced off from that level here, and then now, oops, sorry, and then now in this area. And so the price seems to still respect that level. So here the price has finally come back. What many traders are doing, and I consider it's an error, is the following behavior. A trade has been opened. Immediately after the trade has been opened, the price makes a pullback, and sometimes a deep pullback. The traders begin to panic, but then the price comes back, and so the trader has been under a very important stress. And when the price comes back at break-even, a tendency for many traders is to close the trade. But now if you think about that, when the price comes back at your entry price level, what is the risk at that moment? You have no longer risk. Of course, you may still have a potential losing trade, but at that moment you are in a much more comfortable than when the price was in the pullback. So there is no reason to panic when the price comes back and to close the trade too early. Now, a way to use these levels when you are in a trade is, of course, when the price has made a nice movement and seems to bounce off from such a level, you can close your trade partially or totally on when the price is bouncing off. And of course, should you be in the trade with the alternate exit on the movement invalidation area, in the meantime, your stop loss would have been adjusted here. So making the second unit starting to be profitable too. I would like to see the difference. We still have around 3/4 of an hour together. Just to show you, sometimes the alternative exit gives a better trade, sometimes a smaller result, but on the long term, the two final exits are pretty much equivalent. Aruna says, I prefer to trade H4 because I do not like a long time to sit and wait for the computer. Yeah, indeed. You have to use the time frame. When you have to choose a time frame to trade, you have to take into consideration several criteria. First of all, you need to feel comfortable with the time frame. If you don't like to stay long time period in front of your screen and observing what the price is doing, especially with a small time frame, of course you have to choose a higher time frame. The second point you have to pay attention is the time frame you choose must fit all your constraints you have in your life. Many traders have a 9-to-5 job, and so your time frame must be chosen in order to not be in opposition with your time constraints. The time frame must be in harmony with your time constraints. This is why I like, of course, I love to trade the 5-minute time frame, but I trade also with the daily time frame. I have found that in my case, the 4-hour time frame is not enough. And so after a lot of tests, I have tried the 4-hour time frame, the 6-hour time frame, the 8-hour time frame, and then the daily time frame. I have even tested the weekly time frame. And so the time frame which best fit my own constraints for the higher time frame is the daily time frame. But this is not necessarily true with every trader. And this is why you have to test several of them and then choose the one which best fits your constraints. Yeah, yeah, indeed. If you understand the global context, and you see an opportunity, you can exploit that opportunity in a small time frame. It may be the 5-minute time frame, it may be the 15-minute time frame, it may be also the 30-minute time frame if the impact of the global context may be important in the market. Arunas, you know that you don't need necessarily to check the daily time frame. If you trade the 4-hour time frame, you don't necessarily need to check in details the daily time frame. Because in the 4-hour time frame, the blue balance line represent the more line in the daily time frame. And so by observing what the blue balance line is doing in your 4-hour time frame, you will know what the more line is doing in the daily time frame. And if the price, if the more line is pointing downward, most of the time the price is also moving down. This is because the price is moving downward, then the more line is moving downward. Okay, but you will not see when the price will begin to make a retracement. That's true. You see here the price is bouncing off from that support level. If you feel that you have to reduce the risk on that trade because it seems that the movement may fade now, so there is absolutely no problem to close one unit around that area. So here. But personally, I prefer to stay in the trade and see what will happen. But of course, in the meantime, of course, no reason not to adjust the stop loss. And in this case, I will adjust the stop loss somewhere here. Yeah, reducing the risk, the entire risk, from 62 pips to 30 plus the spread 33 pips. So the risk is now reduced by 2. Arunas, no, there is no best time frame than other time frames. It really depends on the market conditions. I can show you days when the best time frame is the 5-minute, days when the best time frame is the 15 minutes, days when the best time frame is the 4-hour. There is no rules for that. It really depends on the market. And if today has been, for example, or yesterday has been, the 15 minutes has been the best time frame, for example, it may be the worst today. How to select? Simply by observing what the price is doing. Let's suppose you observe the price in the 15-minute time frame and you see that the price is in a choppy mode in the 15-minute time frame. Choppy mode, okay? This indicates that the 15-minute is not the best time frame to trade for the moment. And so you can select the time frame in which the movements are nicely regular, nicely trending. The price is again attacking the 2 support level on the 2 pairs, so we can see if the price will respect and bounce off from these levels or cross these levels. We are also approaching the Wall Street Open. Generally, with the Wall Street Open, which is the stock market, the price can make a retracement relative to the underlying movement. Let's suppose that right on the Wall Street Open, the price is going downward. Usually the price will make a pullback in the opposite direction. On the contrary, if the price is making a pullback upward at the Wall Street Open, generally we will see the price resuming. So very often the Wall Street Open is a short-term reversal. Very short-term reversal. It's not a trend reversal. We call that a time reversal. So seems the price wants to cross the level, which is good. Oh, I have a typo here. I use two lines after the more line, near price line. You mean that yellow and orange lines, Arunas? This is the ETF indicator. This is the ETF indicator, and it is the two lines are drawn at once. It is an indicator called Max ETF dual line, and its setting. If you don't have them, of course, the setting will tell you nothing. So, but I'm using here an 8-period setting. Yeah, the ETF line. They are the ETF lines. You see how the price really hesitates in the area of that support level. In the meantime, the stop loss can be somewhat adjusted that way. What is the next indicator after the stochastic? After the stochastic, I have only the stochastic here. There is no other indicator, Arunas. Oh yeah, with the max standard we use additional indicators, of course. Let me check what is happening here. This candle will close in 3 minutes, and so it may represent an exit setup. So no impact on the pound card, of course, because the trade on the pound card is closed, but it may have an impact here on the pound, on the USD card. So a little more than 2 minutes. Yeah, in both cases we will have an exit setup. But a different exit setup in the two cases. Robot trading. There are pros and cons with robot trading. a fully automated system in the Forex, it's difficult to have a profitable robot. Very, very difficult. Because the trading is a complex task. You need to take into consideration a lot of details, and the market conditions are important to understand. If you don't implement, if you don't code these changes of the market conditions, if you don't take them into account in your trading process, your robot, your expert advisor, sooner or later will fail, because they will not be able to adapt to the market conditions. Now, if you have a semi-automatic trading system, you can start or stop depending on the market conditions, but you as a trader, a human trader, you take the decision, so you drive the EA, then this can be a good approach. Okay, now we have an exit setup bar on both cases here, and so we will have an exit somewhere here if the price follows through on the pound, on the USD CAD, and here too if the price moves in this area, but only in the case the trade is still opened. Now these two exit setups seem similar, but they are completely different. Yeah, right here. They are both given by an indicator, the STO RSI here. Okay. One is given by a pattern exhibited by the STO RSI we teach in the course, and the other pattern, it is a completely different pattern here in the second example, which is here. I can show that a divergence. We have higher highs in the STO RSI, and we have higher lows, and we have lower lows in the price. So this is what we call a basic bullish divergence. And so if the price reaches the exit level I have drawn and a unit is still open, this is a possibility to close one unit. And similarly here in the USD CAD. But of course here I have no open unit, so no exit, of course. But this gives you an idea of the type. The exit rule I have used here for my two exits were driven by price action. Here it's an exit driven by a specific patterns given by an oscillator. No, Bruce, I have no specific recommendation for semi-automatic robots. This is something I'm considering myself. One of my projects is to try to automate some aspect of the max, or to semi-automate some aspect of the max. So here, we have, as you can see, an MX with a small loss on that MX. A more aggressive MX could have been, of course, here when the price has bounced off from that support level. This is a possibility. Like also in this case, I have explained that previously. Okay. But let's consider the exit here. So the loss would have been here around minus. So 14 plus the spread 16 pips. Minus 16, which is small compared to the stop loss size of 52 pips. Minus 16. The result level on the USD CAD matches the green TT. Oh yeah, that's possible. That's possible. It is the USD CAD. Yeah, you are absolutely right, Dan, indeed. And so this means that in fact, a more aggressive exit could have been made, as I have said, in this area, somewhere in this area. Okay. Okay, send me information, Arunas. Send me informations. I will investigate. So in the Max, it was one of our Max graduate who has mentioned me that here we had another potential exit based on a specific indicator we have in the Max, and in this case that indicator was matching this support level, and so this is why I explained that indeed we can have a faster MX here. And so let's see if the price will reach the invalidation area here or not. Thanks, Arunas. I will make some investigations so to get an idea. You can see then that the price here in this area is just also bouncing off from another Tiger Tunnel, TT, which is the gray one, okay? And it's not a surprise to see the price bouncing off and so seeming to come back. These TT lines, I am always amazed to see how the price react around these lines. They really seem magic. Runas, an important management rule is if you don't know why a robot is good, don't use it. In order to use with confidence a robot, so you have to know, to understand how the robot is working. Never have a confidence in a black box. You see, in this case, I have explained that we had a divergence, so with an open unit, an exit would have been made in this area. So we have plenty of rules telling us where to make exit. But I would like to see if the price will reach here the movement invalidation, and you can see that in the meantime, even with the price which is globally ranging here, the invalidation area is going downward, downward, downward. Now it is at the level of the first MX. Oh, I don't know them, Arunas. I don't know them. Just to make a comparison between this losing units here, 16 pips, compared to the profit of this trade here, this unit will have a negative rework to risk ratio of minus 0.13. Minus 0.13, less than 1/4 of this profit here. This means that most probably, even with a profitable trade and probably a losing trade, the two trades will be globally profitable. So, and if you use the same risk, for example, 1% or 2% on the two trade, you can compare the reward to risk ratio. Okay, the price continued to resume downward. Let me move that notation here to have a better reading of the chart. The price is still attacking the same support level. Now, this is a good indication for a continuation of the downtrend. You can see the price has attacked several times the support level in both pairs, and the retracement which have followed have not been deep retracement. And so usually this is a good indication for a future breakdown. Usually in such a case the price will break the support level. Because what does this indicate? This indicates that around this support level we have buyers stepping in, but they have not succeeded to take the control of the movement. And so when the price comes back, this means that now sellers are again there trying to take the control, and for the moment the sellers have the control. And so if they have really the control of that downtrend, the price will finish, will end by break the support level. Yeah, Arunas, indeed, I agree with you. But please, let's not talk about robots here. I would like really to talk more about the max here, what is happening here, okay? Just to show how we can combine, in fact, the technical aspect of the max with the understanding of the movement based on the global context, or based on the order flow. Because in fact, when we define the support or resistance level, and a good support or resistance level is a good level of demand or supply in reality. And so when we combine that with the context, then we understand what is happening. So here it's clear that for the moment the sellers have still the control. Buyers tries to step in, but they fail for the moment. On that level here, on the two pairs, we have buyers trying to take the control. But will they succeed? In which case we'll have a trend reversal, and if they fail, which seems to be the case, but no guarantee, of course, we will see the price breaking down that support level. There is again an attempt for the buyers to step in. Again here right on this low, done again on the green TT, okay? And for the pound card, we are in fact between two TT. We call a mid TT. In which case, if we have opened unit, this represents also an opportunity to close one unit. And you see how the invalidation zone area continue to go downward, despite the fact that the price is, for the moment, almost not moving at all. And similarly here, so in the worst case scenario, I can tell you what will be the worst loss in this trade. If the trade is closed, the second unit of the trade is closed, let's say here, on that IZ line, invalidation zone line, but this is the very worst case scenario, the loss on that unit will be, let's say, 28 pips plus the spread, so 30 pips. 30 is a quarter of the stop loss size, because we have to divide by 2, so around 0.25. And this one was 0.13. So 25 and 13 is 38. So let's say 40. The loss here will be smaller than the profit here. So the two trades will be profitable. And we know that in advance. And this is the worst case scenario. And so when we take into account, when we always take into account the risk aspect of the trade, believe me, even in an unfavorable situation here for the trade on the technical aspect, you will feel comfortable. And in the meantime, in both cases, of course, we can adjust some of the stop loss here. I would adjust the stop loss here. And in this case, in the pound card, somewhere here. Statistically, for many news, not all the news, because there are some news which are much more important than other. For example, an interest rate modification. But for many news, the full impact of a surprise, a big surprise, is made within 5 hours. And so this is why the movement after a news release can last several hours. It seems that among the 8 pairs I have chosen, the trade happens have happened on the two, or the trade I'm noting on the chart have happened on the 2 best moving pairs, because on the other pair I see on my other screen, the movements are more limited. And so this is what will really happen very, very frequently. If you have an opportunity with a pair where a news has weakened a currency and another news has strengthened the currency, you have the optimal situation, because with the pound being weak, the CAD being strong, it's almost a sure thing that the pair will go downward in the direction of the strong currency. You see, in terms of order flow, whenever there are some buyers stepping in, very quickly sellers appear to counteract the movement made by the buyers or the action of the buyers. Because of course in the market, whenever someone is buying, at least someone else is selling, which is not necessarily the case with what you are seeing in your Forex chart. Don't forget that the data feed you receive is the data feed the broker sends to you. It's not because you have a price that a trade has been made, okay? But usually when someone buys, another one at least sells. Otherwise there is no trade, of course. This is a banality. This is a truism. However, when we say that whenever someone buys, someone else sells, this does not mean that trading is a zero-sum game. And in the Forex especially, trading is not a zero-sum game, because there are always new traders withdrawing from the market or coming in the market, adding new funds in the market. All the actors in the market don't have the same objective. The amount of money being exchanged is not constant over time. So all these reasons, and there are other reasons, make the fact that trading is not a zero-sum game. And so whenever a trader, even a trader who claims to be a professional trader, explains to you that the Forex is a zero-sum game, you can conclude that he doesn't know what he's speaking about. You see, again, the price on the pound card has attacked the support level. Some buyers are stepping in. They fail to take the control. You see now sellers counteracting the buyer's decision or action or intention. You see here the movement invalidation area is progressively reaching the area where I have made my XXX. So this means that in the worst case scenario, both way to close the trade will be equivalent. In the worst case scenario, should the price continue to move downward, the movement invalidation will come lower, and in this case the alternative way to make the final exit will give a better result. But this is not always the case. On the long term, as I have said, both techniques are equivalent. But it requires much more patience to exploit. And this is not necessarily the case for the max standard. Because with the max standard, it was not the case here, but with the max standard, we have a scaling process. When we add to a trade, we have to control the risk on the trade in a much more accurate way. And so it's out of question to make systematically the final exit on the movement invalidation. So this candle will close in 30 seconds, and will we have an exit rule triggering here? No exit rule here, but the price in the case of the USD CAD is approaching the movement invalidation. So and so this would be good, because this would have been a positive trade, a negative or a profitable trade, a losing trade. But as you will see, the global result will be positive. I'm going to widen this stop loss just in case of. Now, when we make really the trade, we use I use the max trade monitor. This stop loss is figured out with a red horizontal line, which represents the stop loss, and I can move it with the mouse, and the stop loss is adjusted automatically. So this candle will close in 3.5 minutes, so we have time. I have shown that we have several levels of supply and demand, or support and resistance. You see different colors. The colors have no special meaning. It's simply the fact that to define them, in order to better pinpoint a significant or a relevant level, I use several time frames. The monthly time frame, the weekly, the daily, the 4-hour and the 1-hour time frame. And so I associate a color to the time frame, but one time frame is not more relevant than another time. It simply helps me to better pinpoint where a level is located. And the color has another feature. The white line, in fact, corresponds to the levels for which I have used the 1-hour time frame. And there was another one, I think the purple line, the yellow line correspond, I have made them with the 4-hour time frame. When I trade in the daily time frame, I ignore the white and the yellow line, because of course these levels would correspond then to smaller time frames, which make no sense to trade in the daily time frame. So they help me to remember which time frame I have used to define them, and they help me to ignore some of them when I trade in the daily time frame. So in the daily time frame, I keep only the max levels from the daily and the weekly and the monthly. Well, it seems that the price wants to bounce off from the more line here, which is very often the case when the price is in a trend, and when the price has a reason to be in a trend. And we had a reason: bad numbers on the US, bad number on the pound, good number on the CAD. And so in both cases, the trend is a downtrend. And we can see that the movement invalidation is improving. And in this case also, okay, here stopped out. So XXX here. You see how a fast spike can stop out a trade if you have a real stop loss. So here, oh, where is my cursor? Okay, here. So XXX. And because the stop loss is always a hard stop loss, so the stop loss will be executed. So I can take off that level, and I can write here how many pips from this to this. So 27 pips, and the spread to be 29 pips, so minus 29. Giving here, so a losing trade with a reward to risk ratio. So I have to draw another vertical line here. So we have trade Now the max trade monitor notes these results automatically on the chart. So we have minus 16 and minus 29. This means minus 45 pips. So the stop loss was how many pips? 62 pips. 62 pips. This means a negative reward to risk ratio minus 0. And you will see that it will be a small one. So 45 divided by 2 and divided by 62. So minus 36 R. Okay, always a small loss with the max when we have a losing trade. On average, we have a 75% winning trade, 70-75, and around 15 to 20% losing trade. Now it depends on the market conditions. Sometimes the winning rate is way better. Sometimes it drops to 50, 55, 50. Rarely lower. It may happen, but it will never last a long time with at a low level. And you see, globally, the two trades are positive. Okay? So you don't have to comment if you don't want to, but when you got stopped, wasn't it an ETF setup to go long? Yeah, indeed. In fact, in this case, and you are perfectly right, Dan, to mention that question, if this setup bar, if this blue bar here, this one, okay, if this bar is a valid entry setup bar to go long, now I don't say it is okay because I don't have all the tools on my chart, but if this is a valid entry setup to go long, the exit of this trade should not have been made on the stop loss, but should have been made somewhere here a little earlier. Okay? But only if this bar was a valid entry setup to go long. Okay, Dan? And you know when if you trade with the ETF, you know when it is a valid entry setup. The fact that the two ETF lines are reversing is not enough to say that this will be a valid entry setup. There are other conditions to be matched. In the meantime, you can see here that the movement invalidation area is still lowering a bit lower, going a bit lower, bar after bar, even if the price now is here in a range area. We still have a few minutes, so we can see. I would like to see if the price will succeed to break that support level. Now, when we use the sum component of the max sum ETF, we can get better entries and exit because we can be much more accurate in the way to do the entries and the MX. So now we can ignore the USD card. Now, in the absence of a news release, one point must be important to understand, and especially for the max graduates who are present here. In the absence of a news release like today with a big surprise, an important news release with a big surprise, this entry here on the USD card and this entry on the pound card are never taken because they are never valid, because these correspond to entries after long bars. Okay? This should be clear. In the absence of an important news release with a big surprise, these entries are not valid. They become valid because we are in a special circumstance of an important news release with a big surprise. Okay? And I have explained that even in this case, these entries were a bit risky because of an ambiguity between the non-farm payroll and the unemployment rate. They were in opposition. A bad non-farm payroll, but a good unemployment rate. Should the unemployment rate be bad too, the movement would have been way, way more important. Okay? And you see here now this blue candle here. So let me take off that line here. This blue candle is a setup for a movement invalidation. And so in the case the trade would still be opened, the exit would have been made somewhere in this area. So very close to the stop loss level. Any questions about everything I have explained today? Or I have shown, because I have not explained all the details. This is the subject of the course, of course. But you can see that when we have a big news release, under a big deviation, we have some opportunities to trade. In the absence of a surprise, big surprise, it's better to skip trading. And sometimes one of our max graduates has mentioned that even when we have an opportunity, sometimes we have to go fast to close the trade. It's better very often to close the trade earlier on an exit rule than to wait later for a potential target, price target or price objective to be reached, or like in this case it was easy to define because we have had an ample movement to wait for the alternative exit on the movement invalidation. That in the meantime the price is moving in such a way that that movement invalidation area continue to drop and progressively reaching our last exit level. And in the meantime, of course, we can continue to adjust the stop loss. For example, the stop loss, I would place it here. Yeah, even a bit lower, that way. Oh, okay, I have answered the question. It was a question about closing the trade if we have a long setup here. No other questions? Let's wait for this bar to close and the next one, and after that we will wrap up. If you want to convince yourself that opening a trade along the first candle after the news release, what you can do, you see here I don't display the horizontal line corresponding to the bid price because it is that white rectangle. But you can do that. You can do that in the following way. It's because I have made my grid to none. So if I set my grid to white, so we will see the bid price. And if you want to see how the spread increases during the news release, you can, in the properties of the chart, here in the command panel, you can check here the box show ask line. And so the ask line will then be drawn in red because it is defined as a red. Now you have the ask price. And during the news release, or just before the news release, and sometimes after the news release, you will see the spread widening, and sometimes widening very, very importantly. And what you will see very frequently, and this will help you to understand why during these spikes you may have frequently almost always bad price execution, is you see this spike here. This means that the bid price has moved up to this point here. But what you will observe very frequently is at that moment the ask price was stuck to this level. And so the spread was progressively increasing. And so if you don't display your ask price line, or if you are not aware of that, and you make an exit in this area because you see the price has made its low and begin to retrace, you will not be executed at this level, but you will be executed where the ask line price is. Because in a short trade, which is a sell, the sell is made on the bid price, but the close, which corresponds to a buy, is made on the ask line. And so if at that moment you have a wide spread, a large spread, you have systematically a bad price execution. More ETF explanations. Okay. So I need to show a larger portion of the chart here. As I have said previously, with the max standard, okay, with the max standard, when the price is moving below the home base, and even the home base channel, because you see the moving average is surrounded by an upper band and a lower band. The upper band is defined with the high price, the lower band with the low price, so they define a channel. And so we look for short trade when the price is below, and for long trade when the price is above the home base channel. What happens very frequently is the following behavior. Let me see if we have such a case here. Okay, let's see here. Let's suppose for a moment that that movement is tradable with the max standard. Okay? Of course, the downtrend does not start in this area. It starts here. And so the aim of the max ETF is to catch the trend as long as possible. We want to catch the trend as much as possible. The largest possible portion of the real trend. Okay? And let me see if we have another nice example. Okay, you see here, with the max, this portion of the max standard, this portion of the movement most probably was exploitable. Let me check something. Yes, from that area. Okay? This would have been a max standard trade. The close of the trade would be somewhere in this area. With the max ETF, most probably, I don't have all the tools here, but most probably we would have been able to start the trade in this area. And so to catch all that movement here. And in fact, all that movement here. So starting with that red candle here. In the absence of news, of course. And so this is the aim of these two max ETF lines plus other tools we have on the chart, because I don't show the entire all the components of the max ETF. So this kind of movement I call a directional momentum movement, which is made of a max counter trend movement here and a max trend. So it's the combination of the two types of movement. With the max standard, not all these movements are necessarily tradable, but with the max ETF, we can trade that entire movement. And this will happen very frequently. Look here. With the max ETF, we can catch all that movement here. While with the max standard alone, we would have perhaps traded only that movement here, at best. Okay? So larger movements, more movements too. Because with the max ETF, when we have a small movement like this one, for example, it may be tradable. And when the length of the movement is 15, 20 pips or more, so minimum 15 to 20 pips, we know that afterwards, of course, then the corresponding trade usually will be profitable. A small profit, but profitable. Okay? So this is what I can say with the max ETF. And so you can see that in the meantime here, the invalidation zone 9 continued to drop, and now it has reached almost my XXX here. Okay? So with the max ETF, we have many more opportunities we can trade. We can catch when we have trends, larger movement to trades, but we have to pay attention to something else. Because we have many more opportunities to trade with movement more or less larger, usually the winning rate drops somewhat. Instead of having a 75% winning rate, we may have a 60, 65% winning rate. Which is not a problem, because on the opposite way, the reward to risk ratio will increase importantly. Indeed, if we are able to catch an entire movement which starts on one side of the home base channel and ends on the other side of the home base channel, it's very frequent to make a reward to risk ratio of 5 to 1, 10 to 1 or more. And so this compensates very, very largely for a smaller winning rate. Okay? Okay, if there are no other questions, you can see here that now we may achieve perhaps the movement invalidation zone area, which will give, if this is the case, which will give an exit approximately at the same level as my initial XXX here. Okay? Well, so I don't think I have missed some question in either the max chat area or the question area. I don't think I'm going to check them very quickly. No, I think all the questions have been answered. Okay. Anyway, if you have some other question, you can contact us. You can send an email. There is no problem for that. You can check our website. Let me show you again our website. Where is it? Here. So this was the calendar. The website for the Max news release are here. For the news watch, sorry, the news watch. Every week we update the list of the important news. We have also the top 14 pairs, which are pairs where it's interesting to check where to consider. You see the pound card was in the top of the list. The USD card, was it in the list? No, it was not in the list, but it has been defined by the context. Okay? You can be informed freely, and you can access that freely either by accessing our website here, so maxtradingsystem.com/newswatch, and you can be alerted every week when the update is made by putting here your name and your email address. Now, the landing page of our website is this one, so maxtradingsystem.com. So you will have our web page, so the landing page of our website, and so you can register to be informed of any coming webinars. And I think, yeah, you can chat with one of us here by Skype. Okay, if there is someone present, you can ask questions, and so you will be answered if you have Skype, of course. Okay, so don't hesitate. If you have questions, you are welcome to contact us and to ask your questions. Yeah, then and explaining the decision process in the context of a news release requires much more attention, because while I'm explaining what is happening on one pair, I don't necessarily see what is happening on the second pair. So this may be sometimes delicate, but indeed in any situation we need to stay cool, quiet, and try not being overwhelmed by our emotions. I don't say we have to control our emotions. I don't believe in that paradigm. I believe better on the fact that we can live our emotions. We learn a lot on our emotions, but we have to control our actions. And so when you know yourself better, you will better drive your actions, whatever the emotion you are feeling, because in such a case, your emotions may help you. And this is part of the intuition we can develop about the market. And when you know what to expect from the trading system you are using or the trading methodology you are using, there is no need to be under stress or to panic. You may have, as today, a winning trade, a losing trade, but the day is profitable. Okay? And this is what is important at the end of the day. It's not the winning rate. And we have to put our ego on the side way. It's not because you are making a high winning rate that you are an exceptional trader. A good trader is a trader able to call nice trade, to handle the trade correctly, okay, using the rules perfectly, using some level of the trading system, and then when the trader is able to grow the account, the trading account, to keep the profits. Because this is a problem with many traders. They can make nice trades and nice profit, and then suddenly they give back all their profit because something went wrong. Okay? Well, I see a question by Paul. How is some course different from other? Okay, the Max ETF here, you see, the Max ETF uses the time bar chart. Each candle in this example today is a 5-minute candle. When we add the sum component, we use constant range bar instead of time bars. So constant range bar. The constant range bar chart must be used carefully For example, one problem I see with many traders who use constant range bar chart or Renko bar chart, they are pretty much similar, even if the constant range bar chart on the long term are more profitable, but the Renko is sometimes easier to handle. The size of the bars must be chosen carefully. Many traders don't know how to choose the size of the bars. And so when we use the sum, so the sum is the exploitation of the appropriate constant range bar chart, we make earlier entries, we make better exit, we have many more opportunities to trade, so we are more accurate in our entries and exit, and usually we will have also smaller stop losses. And so the combination of all that makes our reward to risk ratio way, way larger. Okay? So this is the advantage of the max sum ETF. Okay, I thank you very much for your nice comments, for all your questions, so for your participation today. I always appreciate that kind of interactivity. I wish you a very nice end of the week, a nice weekend, and so see you on the other side. And in the meantime, take care. Bye everyone.